I've got a subject that we've talked about a little bit before, but it's been brought home very forcefully to me just in the last few meetings we've had with people that are considering whether they want to have All Financial be their retirement planning company. And I say it's that way specifically because there are people that do investment management and they're investment advisors and they're stockbrokers and they're building asset bases out. And we think that we differentiate ourselves considerably because we really think of ourselves more as planners as much or more than we do the investment counseling, because we are full service. We do have the insurance side of things, whether it's long-term care, life insurance, whether and when to take Social Security. How will doing Roth conversions mean anything to me and or my children? Will it affect my Social Security taxation? Does it affect my what I pay for Medicare? There's all these different pieces to it, but there's even more than that. There is a huge psychological chasm that comes up for a lot of people that are trying to make that jump from I'm accumulating assets. I think differently about investing while I'm earning a paycheck and paying the bills because my money that I invested is sitting over here and it's for the future. It's for the rainy day. It's for when I retire, build, invest. Things the market's down a little bit, I want to invest more so I can get things when they're on sale. And when you suddenly make that switch to you don't have your own paycheck and you have to create one of the big psychological hurdles is understanding what you can spend comfortably. Do you want to have that as an investment pool where you pull your income out of that? Or do you want to have that income on a guaranteed basis so you don't have to worry about it? Just think about the difference in how you would look at investing if you had all your money in the market and you were having to take out a percentage of that income each month to live off of. It feels a lot different. So the psychology of how I think I will react versus what people really do can be considerably different. The other thing is understanding cash flows and what you can do and when you can do it. Should you be debt free? Does it make a difference whether you're debt free? If I have the asset and the income to pay the cost of the debt, does it really matter? To some it does, but that becomes more of an emotional issue in some cases than it does a logic problem. If you're looking for people to help you be retired, one of the things you don't want to do is have retirement be a full-time job. Okay. I mean, where you're constantly trying to pinch the penny or move the dollar, and I need to make more nickels, and I need to, I can't do this because it'll cost me this, or I have to do this, but I have to be so careful. If you can avoid that, where you can have things positioned ahead of time or with a good planning structure where the bills are paid, you can get by, you can be comfortable, you can live your retirement, you know what your budgets are, just like you did when you were working, and you don't have to worry about managing the money to trying to save that extra nickel or things. If you don't have to do that, retirement can be a whole lot more fun. But we see people that have the assets, have the wherewithal to be comfortable and not worry about it, and they spend all of their time treating it like a job. They put in their hours every day looking at how things going and worrying about all these little things. Now, if you don't have the wherewithal, it's a little different story. You got to be a little bit more proactive, perhaps, in making sure that you can afford to do what you want to do. But you shouldn't be positioning yourself in that situation where when you don't have to. Well, how the heck do you know? How can you be comfortable in your knowledge? Knowing is power. Knowing is wealth. Knowing what to do and how to do it and what is possible, what's affordable, what the risks are, what the reward should be for the risk you're taking. All of that stuff is what we spend the majority of our time trying to help people realize. So being prepared to change according to how life happens is a really big part of our practice, because we get the phone calls, this happened, that happened, I want to change that. And our job is to help figure out how to make those things happen, and to also, quite honestly, to be the ones that say, oh, be careful about this, 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 and this, because for every situation and every investment and every plan, there's the pros and there's the cons. You have to know what each of them are and weigh them out according to what is appropriate for you and yourself. This is really, really a powerful subject. And we spend more of our time on these types of subjects than we do about what stock, bond, or mutual fund you ought to be in. So the planning becomes really, really powerful. And you will find that if you have someone helping you do those things versus someone who doesn't, you're going to find it a whole lot easier and more comfortable, hopefully, and happy. We hope those things would occur for you with good planning and constant reviews and updates. Those are all important. So the psychology is different when you're about to be or are retired as to when you're building up the money. That was the first premise I made. Then after you get retired, try not to turn it into a job. Maybe you can have somebody help you plan out where you can make it fun.